Good morning, everyone. Happy Tuesday. It's almost 7 a.m. Price of Bitcoin right near $6,400. All right. So we could see overnight we saw essentially a pullback on price from this high right here around 66 to the high of 66.50 almost. So after this high, we've seen some lower highs right there and almost a mini double top. What we really want to see is price effectively breaking down cleanly from this level right here. Okay, so a clean smash and a 1 hour candle below, let's just say 63.75. All right, that's what we want to see for more downside. Okay, and the advantage side, we took up another short trade right there in the community. All right, and I'm averaged in right around $6,500. So by the time you see price, who knows, you might get another opportunity to reshort. Okay. Um, so you're probably wondering, why am I shorting here after we've made a move, all the way up from 58.75 all the way to 66.50, right? That big, $800-900 move. All right. Well, it goes back to looking at the markets from a bigger macro perspective. Okay, so let's keep going on the higher time frames. Okay, so first things first, obviously on the 1 hour, you could see prices, slowly breaking down. You could see volume right here, down here as well, also increasing as candle spread is going down. Okay, what we want to see as volume increases is candle spread also gets bigger too. You don't just want to see volume increase, but then candles stay tight, because what that tells you is maybe there's some absorption going on. Okay, and that may not be good, because what could happen is we can make it like this and then start pushing back up. Okay, so I am careful, and I will warn my community of exactly what I'm considering doing if that does happen. But again, for now, we had our short position from a couple days back around 66.30 or so. Closed some right there around 62.33, closed some more around 58.75 or so. And then I got stopped out, I think, over here when, the candles pushed back all the way back to my entry point, essentially. So once I got out of that, now I'm, looking for more reshorting opportunities, because if you look at this from, again, a wide angle perspective, which is, this was the previous consolidation right here, before we broke down, right? And so if you look at this, that tells me that clearly there was 3 days of consolidation, and then big sellers stepped up and crushed the price down. So if they did that, I don't know if the same sellers who maybe absorbed the shorts in this particular area will allow price to come back to this area and then break through it. Okay. Alternatively, I could be wrong, and in that what could have happened is the buyers were really absorbing here. They let the sellers temporarily win the battle, but the buyers, the bulls, are about to win the war, essentially, which is they could be driving up prices even higher. And this drop right here was to reaccumulate more longs. Okay, they allowed this drop to happen. The chances of that are happening, I don't know. I think they're less than 50% in my opinion, at least as of right now, the way this structure looks. And I'll show you guys an interesting fractal that I showed my Advantage community members yesterday, okay? So number one, what you need to understand is the importance of the current level, which is the 6410 marker, okay, right there where we are, okay? That comes back from December 2019, right? So that was, key resistance right there, broke up above it, used it as support right there, broke down, and now we're effectively using it as resistance right there. Okay, so if you look at this particular block and you compare it to what happened up here, same thing, right? You use it as resistance right there, broke up, support right there, broke down, bullish engulfing, and then broke down even further. Okay, almost a very similar fractal in my opinion. And I like both of these because they're both on, mini uptrends like this. This was a 2-3 month uptrend. This was about a, 15-25 day uptrend. Okay, in my opinion, I think they're pretty much the same. I don't think this bullish engulfing means all that unless we actually smash up above 6410, and hold a daily candle above that area. Okay, until that point, I personally believe that we could still go down from here. Okay, that's my thought process. And I'm going to stick to that unless I'm proven wrong with, like I just said, the other scenario. Alternatively, let's just say I don't want to wait for a daily. What are my other options? Well, I mean, on a 4-hour time frame, if I start seeing, a strong candle close above this block right here before we had a consolidation and then broke down like that. So say, for example, I see a 4-hour candle close up here in this box. Okay, in this box, I mean, let me show you guys real quick. So if I see a 4-hour candle close above this area right here, let's just say $6,700, okay? This is where I'd be looking to get out of my short and then, effectively looking for longs, okay? Because chances are if you're closing a 4-hour, like a strong 4-hour with strong volume, chances are you're probably going to push up higher toward these highs, which is 69.50 and so on, okay? So it's hard to gauge exactly what the market is trying to do right now, other than the fact that, I personally see this as, I don't know, price coming back into this previous consolidation as resistance, just like this one. And then I, effectively see price breaking down further, okay, over the, next month of April, okay. Remember today we actually do have the monthly closing, all right? And so the monthly closing above 64.10 would, I mean, it would probably be very good. It'd be a good sign in terms of, how you look at this pull down, this push back up, and then, potential SFP. Again, for those of you who are not aware of SFP patterns, it's a swing failure pattern, meaning that below a key area, you push through and break through it. However, you actually close the candle, above that previous low. Okay. Same thing, to the upside too is, for example, like a SFP would be, let me see here. Let me see if I see any. I don't see any on this chart, but I'm sure there's some to the upside that I can find. Let's see here. Okay. I mean, technically this is an SFP, if you think about it, right? So we go on the 4-hour, put this right there. Notice that we pushed up past this, right? Took out some stats, but then closed back under. That's your SFP, swing failure pattern, right? So this was on the bearish side, right? So it's flipped back around versus what I showed you on the bullish side, which was the monthly, okay? So whenever you have wicks, kind of pressing up or down into key lows or key highs, and then they close back under, and then eventually it goes the other direction after doing something like this, those are swing failure patterns, okay? So they're effectively saying that we went up there, took out some liquidity, but then the bulls or bears in this particular case were really strong and they pressed prices back down, okay? All right. Now going back to the 4-hour time frame, okay? So we just saw the 4-hour close because it's just 7 now, all right? Now this is a pretty good 4-hour close in my opinion, okay? What we want to see again, all right, is the next 4-hour closing below this one at the very least. And if it starts closing below these two wicks right here, okay, I would feel very comfortable. I would feel very comfortable potentially adding on to my short, because chances are we're probably going to go, back to these lows and potentially lower. Okay. I don't really see any other way how we can, if we close below these wicks right here, which would be a significant amount of liquidity taken and puts this whole, move up in peril, I'd probably say, we have more room to the downside ahead. All right. Let me see here. So I mapped out these weekly opens just to take a look at that. Obviously we opened the week pretty strongly, pushed up all the way to 66.50. I personally think that at some point during this week, we're going to either retest this weekly open or potentially just, smash through it. Okay. And again, I'm looking for targets for my short based on, let me show you guys exactly where we are. Okay, so if we throw out some fibs right there, right, as you can see from this low to this high, I'm at least looking for this fib, 382 fib. And then to the downside, I'm looking for the golden pocket, which is around $4,700. Okay, I personally think it can happen. Okay, for obviously, in terms of technical reasons, I believe it could happen. For more fundamental and macro reasons, I think this is what I'm seeing in the chart, which is that the Dow Jones, S&P 500, I personally believe that they're in their dead cat bounce mode right there. All right. And if we're really supposed to go higher, you want more participants involved. So you want maybe a double bottom like this, where people see this as, oh, okay, it looks like we're forming a double bottom. And so more people start buying right here, and then we start pushing back up. Okay, again, chances of a double bottom happening and we just kind of recover out of this bear market, really fast, in my opinion, are very slim. But if there's ever an opportunity for this to resolve quickly, it'd have to be something like this rather than just a V shape and just taking off. I personally don't think that there's less than maybe like a 5-10% chance that we just kind of V-shape recover out of this. I just don't see how that's possible, but again, it is a possibility I'm keeping aware of. But again, the more bullish scenario that I look out for in the stock market is something like this at the very least, which gives us more time, at least until mid-April, May, June, to look at this W bottom, and we might get another opportunity if the stock market is post to actually bottom. We might get another stab for longs for BTC down here around 4,000 levels, 5,000 levels, etc. Okay, and in which case I'd rather be short now rather than being long now. Okay, pre-market for the U.S. Stock futures looking okay, nothing great, nothing special in terms of bullish or bearish. The Asian markets and the European markets, not too bad, to be honest. Slightly positive, more so in the Asian markets. European markets are still, I guess, recovering because they had a significant economic slowdown, just like America did. And I also think that their markets and banks and central banks are taking a pretty massive hit. And clearly, their markets were also oversold, just like America's was. So you get this, sort of dead cat bounce like this. Okay. Last but not least, I wanted to share with you guys something interesting. I like Joe right here because, in my opinion, he always tweets out very important information that most maybe Bitcoiners and perma bulls may not agree with. But nonetheless, I think he puts out important content. Okay, so I actually answered this question too for SBF. I didn't even know they had a prize giveaway, but what they were doing is, basically the owner of SBF was asking, what do you think this means right here? When you see these whale alerts of $120 million USDT minted in the Tether treasury, right? Whenever something like this happens, it definitely raises flags. Puts things on radar. And I also didn't accept that this was an inventory replenish. It just didn't make sense at a very particular time. So my answer was actually something simple, which was people are obviously selling BTC to get into USDT, whether it's to hedge positions, whether it's to just completely get out of the market. So my answers were actually B and C. I actually didn't think of A, which is OTC flow, meaning that there might be, more demand and USDT is getting created. So exchanges are, setting up big buy orders for, $120 million or more on exchanges. Okay. I don't know if A is possible, but I definitely know B and C are possible, obviously due to the fact that the market sold off and the conditions are still, finicky in the market, especially in crypto. Okay. So, I like Joe's explanation as well. Again, you guys should follow him on Twitter if you can. What he says is, there's also more troubling possibility. Some USDT only exchanges may be running fractional reserve shops. Now that people are selling crypto for USDT and trying to withdraw, exchanges don't really have that USDT and need to buy it ASAP to maintain liquidity. So effectively, his example of fractional reserve is printing money like that doesn't mean you actually have it. I mean, it's just virtually created, right? It's just like fucking magic paper, just like America prints money, So in the same token, USDT being created doesn't mean that, they're going to have the backup dollars or Bitcoin to back up that USDT. So when people try to withdraw USDT, for Bitcoin or USDT to get to US dollar, they actually may not have that USDT available. Okay, so his next answer is also interesting, which is that, or was it, I would be very surprised if this year ends without some major crypto exchanges blowing up. Makes sense, right? I mean, if you are printing money that you don't have the capital to back it up for, or real, money to back it up, when people try to remove their money, just like people have bank runs, it's going to create insolvency issues, right? So exchanges are going to get run over. They might have, lawsuits or too much demand for USDT, especially if, remember, if we have another spill way down here, it's going to cause a massive issue. If prices go into 3,000, 2,000s, maybe even, high 1,000s, it's very possible. People are going to panic, right? Especially if there's also not enough liquidity on exchanges like, let's just say, BitMEX or Bybit or other exchanges that can actually hold up the spill of the sellers coming in, right? So if there's not enough buyers, remember that on this spill, there was an article written that there was only $30 million separating us from 3,600 this low to zero. Okay, $30 million. And the only way, BitMEX effectively stopped that was they just shut down the exchange. Whatever reasoning that they gave doesn't matter. The point is that there were only $30 million worth of orders separating you from $3,600 to zero. Okay, so the question is, between price here, 6,300 to 3,600, how much money is there, in terms of buys? And from 3,600 down to, let's just say 2,000, how much money is there? And if supply outweighs demand, price is going to get crushed. And as I've said before, Bitcoin being the high risk asset that it is, it will get crushed well before any of the other assets get crushed. Okay. And the interesting thing is something that you may want to pay attention to, because it's a high risk asset, you will actually start to see signs of weakness. Okay. Let me give you a perfect example. All right. So check this out. Okay. So we started seeing signs of weakness right here for Bitcoin, right around beginning of February, obviously because it was already near the resistance. But remember that the institutions and hedge funds and professionals are much smarter than you, me, and sometimes even the government. Okay. So they know what to look out for on the horizon of, things that may affect their money in the markets. So when you started seeing this form of lower highs and distribution pattern right here, and then this spill, and then this spill starting, I would probably say that around this period right here, or I guess middle of February and end of February, I could almost guarantee that there were some smart participants in the market who knew that, the whole coronavirus thing was getting worse. Okay. And so you start the spill of Bitcoin, which is the first asset to be sold because it's high risk, right? So the first asset to be sold gets sold off and then pushes back up, pulls off again. And this is where the real spill happens, where all the markets panic, right? So this was March 12th. Okay. So March 11th and 12th, this was, this area right here, this candle right here. So as this candle went from, 2630 points all the way down to 2475 or so, almost like, 150, 175 point drop, Bitcoin also dropped about, 50% in a day effectively. Okay. So the point is that if you start seeing, this kind of distribution pattern setting up and you start seeing more sell, I could almost guarantee that we're probably right near the top of the stock market, this little dead cat bounce, and then we're probably going to start our spill in the stock market. Okay. This is just something I've been paying attention to. Again, you guys know me. I put out my trades and my analysis and my insight on the stock market, just like Facile does, right? So we have this advantage community right here, put out daily live market updates, let people know exactly what we're doing. Even over here, I actually posted my screenshot of, showing you guys that beginning of March right there. Okay, I closed out of all my equity positions this morning. I'm a bit paranoid that the market has some structural issues in the economy and that it has not fully priced in. The positions I had open were Facebook, Amazon, Netflix. And then I said, I don't know why I said I'm not 100% in cash in equity markets. I think I meant to say I'm 100% in cash. That doesn't make any sense because if I closed everything, that means I should be in 100%. That's just a typo. Anyway, point is I was in 100% cash beginning of March, and I let my community members know. And then I also let them know in terms of my the crypto positions right here. Okay. So the transparency that I provide for the community, in my opinion, is unlike any other community where I let you guys know exactly what I'm doing. All right. And we obviously timestamp it and let people know, right? So in this particular instance, you were able to effectively get out of the market, the crypto market right up here. Look, February 12th was this candle right here. This is where I got out of all my long-term spot positions. I had Nexo and Link and Tezos and Ethereum and Bitcoin, other shitty altcoins as well. But I got out and never looked back. And then this happened. And I still haven't looked into altcoins. Okay. Now in this particular instance, all I'm looking for is opportunities to short. That's it. Every chance I see a pop-up like this, I want to short. Because has the macro perspective shifted of the virus and the markets itself looking really weak? Not really, not as per my opinion. Where am I wrong, right? I'm wrong if, this thing starts going up like this and like this. And in that case, if we're really supposed to do a V-shaped recovery, whatever, I'll flip my bias from short to long and I'll make some money wherever I can. Okay. But in this particular instance, I think it will pay off to understand what's happening in the world and know that the global economy is struggling. Markets are definitely struggling. There's definitely a significant amount of liquidity issues where money managers, people, professionals, everyone is looking for the flight to safety, which happens to be the most safe asset, which is US dollar, cash. Cash is king, okay? So in this particular instance, the dollar is what everybody wants. This is what happened to the dollar when everybody sold Bitcoin and gold and equities and oil, okay? The dollar went up because most of the world is already dollar derived. Debt is dollar derived. Gold is dollar derived. Oil is dollar derived. So if you look at those prices in terms of dollars, right, everyone fleeing those assets comes back to dollars. Most of the world itself trusts dollars more than they trust their own currency. So the real safe haven asset isn't gold, it's actually the dollar, at least as per this chart. So if you look at this chart right here, you see that the dollar was completely spiking. Obviously, it had a pullback for the last 5-7 days, but if we continue to sell off in the equity markets, if we continue to sell off in gold right here, okay, if we keep spilling to the downside, it looks like gold has already started its turnaround. Oil didn't even stop, okay? Oil is just shitting the bed completely. It went to the teens right here. Where did it go? I want to check out the slide. I think it was like 1930 or something, $19.30. Yeah, so 1929. We went to a low of 1929. Okay, that we haven't seen, all right, since 2002, if I'm not mistaken, right there. So you haven't seen that kind of low since over here, March 2002, all right? This is, definitely scary shit, okay? Whether you want to, look at the market through a bullish perspective, you should be looking at oil as a major factor of what could drag down the global economy anyway. Remember that major banks across the board, okay, bank exposure energy. Look, check this out. Okay, U.S. bank exposure to the energy industry and oil. Okay, this is, you know, Citigroup had the largest exposure by outstanding loan balance of about $19.4 billion. Okay, I think Wells Fargo also has a good amount of exposure. I think it's like 9.5 or 10 billion. I forgot what I read. Anyway, so point is, as you see oil going down, you'll see banks start to, you know, see maybe defaults on their loans. As you start to see banks defaulting on their loans, that means they're in a lot of trouble, okay, because they cannot pay their bills or other people aren't paying their bills, okay? So they're gonna ask the government for a bailout. And the government's already bailing out everyone, so they'll probably bail out the banks at some point. But if this thing starts cascading from other industries into banks and into multiple banks, the US cannot bail out everyone. And so what you see effectively building is what you saw in the 2008, 2009 financial crisis. You have to pick, you know, which child do you want to save and which child do you want to let go? In 2008, 2009, we had to let go Lehman Brothers and Bear Stearns and some other banks, right? Smaller banks, but you know that will happen, right? And when those banks fail, some money goes along with them. Other industries collapse with them because other banks rely or other businesses rely on their loans or their money from these banks. Okay, the point is, it's just a real shit show of a domino effect that you're about to start witnessing. Okay, not only, you know, given the fact that oil is already starting to impact this industry, but restaurant industry. Remember, April 1st, rent is due. Delinquency rates are going to be up. Okay, government hasn't started handing out money to the people yet. So again, point is, I'm not trying to scare you, but I'm saying that you can see the slide, you know, slowly building. The market ticking up like this doesn't mean anything. Remember, stock markets are not even connected to the economy. Sometimes they'll just do wild shit, going up or down when the entire economy is falling apart. Okay, so be careful in thinking that just because the stock market is up, you know, the economy is doing better. It's not an indication. Okay, in my opinion, if anything, the stock market is far more detached from the underlying economy, because we saw that when 3.2 million jobless claims came out, the market actually went up right here, right? Doesn't make any sense, okay? But you can make the argument that in this particular instance, market was oversold. Maybe the jobless claims were factored in, but what's not factored in is delinquency rates, which banks are far more exposed to energy, which banks are going to require, excuse me, which banks are going to require bailouts, which industries are going to require bailouts, how many people default on their mortgages, their rent. All these things are going to start being factored into the market sooner or later. It's going to happen. Okay. So anyway, I'm going to look forward to watching the market today and the rest of the week. I'm going to look forward to opening up our new channels for our Advantage members, like I've said, right? So we're going to start opening up Forex options in oil starting tomorrow. Super excited. Again, if you get in at the current price, folks, you will not have to pay the extra amount that we're, you know, going to raise the fees at. The fees might be as high as $125 to $150 per month, but the current paying members, if you get in today itself, or even I guess April 1st, because we're not going to change the price like right away. But even if you get in April 1st, you know, you'll pay $97 versus the $125 or $150 that we're going to raise up the prices. Again, it's only the members who are going to start coming in, you know, April 10th, April 15th, 20th, etc. Okay. All right. Hope you guys come join. Hit the thumbs up. You have the Discord link below. You have the Cryptosomniac link below to sign up for Advantage. Come join and come trade with us. All right. Cheers.